Hey, good morning, everyone. Good morning, Izzy and Paul and GWC. Good to see you guys. Hey, Grant, you haven't been here for a couple days. Good morning, Daryl and Red Rob. And it's Friday too, right? Guys, just a reminder, do me a favor. Discord is having some challenges. When you post in the room, do me a favor and give me one of those screencast links. Give me a link to your picture so that I can pull it up in a browser rather than just copy pasting it. Grant, I know that's new to you, but it's making me struggle to pick those up. And it's a Discord issue. I'm sure it's a Discord issue, but it's one that's going on. I want to be able to move smooth through the class. How's everyone doing today? You guys feeling good? You ready? That news was crazy, wasn't it? That 8:30 a.m. news. Wow. I don't know about your market that you were watching, but the NASDAQ went absolutely crazy. You haven't either traveled back up to Mass? I'm sorry. You had to leave Florida? No worries, Andy. I appreciate you guys doing that. ES tanked. It happens, right? Well, Massachusetts weather should be amazing right now, right? Late June, early July. You guys are what, like a balmy 75 degrees up there? Yeah, Andy, CL is that commodity compared to the indexes, and the news doesn't always work the same. Yeah, and breezy. I like it. It's hot here. I played golf yesterday. It was 98 degrees. Fortunately, there weren't a lot of people on the course, and it was a 3-hour round, 3.5-hour round, so didn't die. We're going to get at it, guys. We're going to have a good time today. We're going to focus on the basics. We're going to try and get some live chart reading in there. We're going to talk about everything that you guys are doing. I'm going to give you everything that I know. The only thing is I need you guys to pry it out of me with good questions. I need you guys to get it out of me when it's, hey, Mark, I was wondering this. Don't wait for me to say it. Ask me to say it. Aiming fluid. I like that. We call it swing lube, Jeffrey. Swing lube. Gotta refresh at the turn. I love it. All right, guys, let's check news. So 8:30 news is done and over. At 9:45, we have some medium impact, Chicago PMI. And at 10 a.m., we also have some medium impact, revised University of Michigan consumer sentiment. Both of these have the potential to move the market. Both of these have the potential to make it change direction, to become erratic. So my trading plan has absolutely nothing to do with reacting to news, but rather stepping away from other people's reactions. So every morning I come to forexfactory.com and I just say to myself, if it's high impact, if it's medium impact, good morning, Steve. I'm going to go toast a bagel, eat a waffle, scratch the dog behind the ears, something other than being in front of the market. And then, guys, we're going to get right into it. This classroom is very much a discussion, guys. It's not a lecture. This classroom is designed to be very interactive. And everything that I do in this classroom, especially in the first, in the first hour, is learning the trigger line and the Fibonacci rules for when it's okay to trade. We're going to spend about an hour talking about what's called a high probability trend trade. And this is a trade, guys. You may get 3 to 5 setups a day, right? You never know, Pete. That sounds like an opinion. That sounds like an opinion. And it may be absolutely factual, but I'm just going to wait for my rules to be met. It's either going to happen or it's not, right? You're either going to get your rules met or you're not. I just don't bother with it's the last day of, it's the this, it's the that. The orange juice crop report said, right? I'm just waiting for my patterns to set up. And the pattern that we're going to talk about first, guys, is the high probability trend trade, because it's a trade that typically wins 70 to 80% of the time. The high probability trend trade is a trade that creates an enormous amount of confidence for you new users, because you're going to win more than you lose, and that feels good. The high probability trend trade is going to teach you to be a chart reader. It's going to have you looking at your charts, and you're going to be able to say to yourself, I have advantages. I should be in a trade. This is where the market's likely to continue. This is where the market is likely to go. This is where the market is likely to stop. And we're going to focus on this high probability trend trade because what it does is it gets you speaking to yourself in terms of advantages. And when you know that everything is right, you feel confident getting into a trade. And when you recognize that something is wrong, you can make the choice to either not trade or being kind of very aware and say to yourself, man, I got to manage this one. I don't have the advantage of momentum or something like that. So there is a path to getting to where you want to be, guys. It's the same path that's been going on since Nexgen has had a live room. And it's post your trades in the classroom, guys. Show me what you're doing. Talk about what you're doing. And then every time you post in the room, what you're doing is you're saying, hey, Mark, let's have a private session. This is exactly what I saw. This is how it relates to the rules. This is where I got in. This is where I got out. Guys, I can look at every chart that you post in this room and know exactly what's going on. The goal is that you can look at every chart that you post in this room and know exactly what's going on. So you have to tell me what you see. You have to tell me what you're thinking. You have to tell me why you entered where you entered. Don't say, hey, I got in. Say, I got in on a pullback to an area. I jumped into the market. I got to the right side of this trouble and then I went short. Tell me what you're thinking. Tell me what your plan is. And what we're going to do is we're going to work together every picture and help you see things a little more clearly, help you read a little more accurately, help you find lower risk entries, higher profitable entries. So post your trades in the room, guys. Simulate all day long, but everything you do, drop it in there. Don't hide losers from me. Guys, losers are where we get smart. My losers are what pushed me forward in my education. It wasn't my winners. The winners feel effortless. But when I lose, I had to recognize what I did wrong, and I had to come up with a plan to correct it, and that's what we're going to do in this room. You've got to simplify. I say this every day, guys. There are a million ways to make money in the market. The futures markets move billions of dollars every day. It's not difficult to capture $500,000 a day, but you've got to be focused on what you're doing. And if you're trying to catch it all, it's like, you remember those old boxes with the super fans and they'd put dollar bills in there? And the lady would go in, yes, there's $1,000 in here and I'm going to catch every bit of it. And she walks out with $12 because she didn't have a plan. Guys, trading's very much like that. You're going to see all the opportunity. You're going to get starry-eyed. But if you keep it simple, you're going to catch more than you miss. And you're going to catch the right ones. So you have to know what looks you're going to commit to, and you've got to learn these looks so they become easy. And that's the second part here, is use the spreadsheet that Nexgen provided, guys. This spreadsheet has 4 tabs. The first tab is your tracking tab. This is what I did. This is what I saw. This was the feedback that I got in class. Your second tab breaks down the high probability trend trade into individual rules so that you can recognize them, so that you can piece them together to put together a trade. The third tab is where you're going to build your own trading plan. You're going to take the looks that you like, the ones that are easy to you. And guys, not everybody's a high probability trend trader. But if you understand the concepts, you'll find out what you are. And then finally, the last section is client trades, guys. Over 350 pictures of you guys being brilliant with the software. It has the entry sequences for both the high probability trend trades, long and short. Has a very mechanical management plan. And then ideas for when you can hold longer. Patterns that repeat themselves every day in the market, as well as areas that are likely to stop the market. Your goal should be to make your section, the favorite looks section, make it look like the one that I put a little effort into. And what you're going to find is that it almost slows down the market. You literally say to yourself, holy smokes, this thing used to be so fast, but now I know exactly what I'm looking for. I know exactly what it looks like, and I'm never going to miss that high probability trend trade. So annotate your charts, guys. I mean, really. To add the 34. So Adriana, is the workspace still open? Cool. So go to your center and here. So from the control center, go workspaces and just go to close it. But when it asks to save it, say no. And what that's going to do for you is when you bring it back up, that chart will magically reappear. You can do that, or you could build a new chart, whichever you find easier. I think that's probably the easiest way though, because you still have to wait for everything to calculate. So just close the workspace, but don't save it, and it'll come back up as it did this morning. Guys, talk about everything that you see. Use the spreadsheet. Go back every morning and study what you did yesterday. What worked, what didn't work, what felt easy, what felt forced, guys. And if you do this every morning, it's going to prepare you for the day. You're going to have this laser focus on what it is that you want to do, and you're going to have this laser focus on what it is that you don't want to do. And then finally, let's talk about a high probability trend trade. It worked. I had a feeling it would. That's about as techie as I get, Adriana, but I'm good at that one. Guys, these are the rules for the high probability trend trade. There's not a lot of writing on this screen. It's only 3 rules, and each rule provides an advantage. Those advantages are down there in yellow, and it's the 3 advantages that equal a trade. It is the advantage of momentum that's given to us by strong triggers. It is the advantage of a clear path that's given to us by no termination conditions, no likely to stop areas. And then it's the entry area, guys. It's being able to get into the market where the market is most likely to continue. You will pinpoint this with some pretty crazy accuracy. And these 3 rules happen on only 2 charts. And more specifically, your first 2 rules are going to happen on the first most current bar of a large chart. Your large chart is this broad stroke of a brush, guys. It's using the roller on the living room wall. And we're just covering a lot of space. Your large chart is going to define the direction of the market. Your large chart is going to define the momentum of the market. And your large chart is going to be where you can identify areas that may be problematic. And you can use them as this giant red flag saying, hey, don't trade into this area, it could stop it. Your first rule, the one that gives you the advantage of momentum, takes place on the large chart. Same with rule number 2. On this one bar, you will be able to define direction, momentum, and areas. And then once you have your rules met, and only when you have your rules met, you'll go to the smaller chart, the faster chart. And this is a refinement chart. What happens in one bar on the large chart is broken down into like 15 to 30 bars on a smaller, faster chart. You're going to use this, hey, good morning, Adamos. You're going to use this to pinpoint where the market is most likely to continue in this highest probability trend trade. And by doing so, by refining this large chart bar, you're going to be able to reduce your risk. You're going to be able to increase your profit potential. And our whole first hour, guys, is dedicated to finding this entry, because once you have a great entry, it creates a very manageable trade. These 2 charts, we use them because they're very much a reflection of the crowds that are pushing things, guys. The large crowd is the large chart. The large crowd has an enormous amount of money, more than you'll ever have. The large chart, the large crowd will pick which direction the market is moving. The easiest, the path of least resistance, is to go with the large crowd. The large crowd, when they want it to go up, they're going to create momentum to push it up. We're gonna grab hold of that. That's our first advantage. We're going to go with the large crowd at momentum. And then the large crowd are going to react at those key areas on your large chart, guys, which means that when they're in the decision-making process, we're going to sidestep. We're just going to say, hey, you guys do your thing. We'll be back in a minute when you figure it out, and then we'll go with the flow. Large chart leads the way. Write that down on a piece of paper. Remind yourself that if the large chart doesn't say go, we're not looking to go. But when it does, we're going to let the small crowd do their thing, guys. These small crowds have money. They definitely have money. And they can create little shoves against everything that the large chart wants, everything that the large crowd wants. But these guys only win 20 to 30% of the time, guys. The small crowd only is able to push down and take over 20 to 30% of the time. So what we're going to do is we're going to let them fight. We're going to take advantage of the fight, and we're going to be able to enter the market to literally pinpoint where the market is likely to continue, right at the point where these guys typically fail. And that becomes your entry for the high probability trend trade. So we're going to let the large chart lead the way. And the large chart is where we are first going to define momentum. And we're going to do that with strong triggers. This is rule number 1. So on your large chart, pretty simple approach is if the background is green, it's going up. If it's red, it's going down. Let's go with the direction, guys. That's the easiest way to do it. In order to have strong triggers on the large chart, your small triggers, these solid lines, and your large triggers, the dashed lines, they must be up and wide and green. If they're not green like the background, you don't have strong triggers. If one is green and one is red, you don't have strong triggers. If they're both green and the background is red, you don't have strong triggers. So how easy is that? Everything is green. And then the small triggers are up and above the large triggers. I want you guys to picture scissors that are opening, getting ready to cut. These open scissors, the space between the small and the large, lets me know that the odds are favorable for the market to continue up. We're going to call this odds favorable momentum. Odds favorable momentum is when we're going to buy Fibonacci support on a smaller, faster chart. On that single bar, it just looks like a tail. On that smaller chart, you're going to see that full shove from the small crowd. In a downtrend, small's below the large, large are wide, the scissors are open, the space is there. The odds are favorable for the market to continue down, guys. Odds favorable momentum is our battle cry in this room. Odds favorable momentum pushes the market. It can break key areas. Guys, it can even cover mistakes or let you take a little additional risk because there's so much strength in the direction. But odds favorable momentum eventually dies out, guys, and it turns into what we call weak triggers. When the small triggers work their way inside of the large triggers, we call this a weakening of the large triggers. It shows you that the trend, that the momentum is dying, it's slowing. And when I have this triggers inside, anything can happen up or down. So guys, this is your first rule. For most of you, it's going to take all of 3 minutes to understand it. When my smalls are above the large, let's make this bigger so you guys can see it and just love on it. When the smalls are above the large, the market is likely to push in the direction of the trend. This strength can break areas. This strength is when we're going to look for entries for the highest probability trend trade. Guys, this is the advantage of strong triggers up. This is the advantage of strong triggers down. There's one of those tails and it continues to the next area. Guys, odds favorable momentum is one of the greatest advantages that you can have. And there's a lot of trading plans that revolve almost solely around this momentum that pushes the market. Is everybody good with that? Can you give me a why? It's a pretty easy look, right? Separation between the small and large. We have it. It's good. Life is good. And then look at this. The smalls are inside of the large. The triggers are weakened. Anything can happen up or down, and I'll be damned. The market went up right from an area. Weak triggers at areas, guys. That's a bad look. They weakened again up here, right at the top, and that's what sets off the market in that down move. And then do you see how the market stutters right here at these fibs? Right here at key Fibonacci areas. The market goes up and down, up and down, up and down, and creates this horribly untradeable thing. And guys, this is where we're going to get into rule number 2. But everybody's good, right? Strength, strength, weakness. Starts with strength. Let's pinpoint an entry. As it begins to weaken, we have to manage. When anything can happen at a key area, dude, the area is likely to hold. This is where reversals happen in the market, and they're pretty easy to identify. And that's where rule number 2 comes in. Rule number 2 says that termination conditions must be false. Termination conditions can reverse the market. Guys, when there's none present, you're going to have room to your profit targets. And when you have room to your profit targets, we're going to call that a clear path. So momentum is a must-have. Brand new users, don't go without momentum. And then once you have it, let's make sure that there's nothing in the way, guys. Because termination conditions, are Fibonacci-based indicators that may, different color underlined, it may reverse the market, and it's going to be based on a comparison of the Fibonacci areas and the trigger lines. So the areas that we're looking for, the areas where the large crowd is making decisions. Support, resistance, yellow 1-to-1, cyan divergence low lines, and magenta divergence high lines. These are the lines on the large chart where decisions are being made. These are where the buyers are buying, the sellers are selling. This is where you see those fights within the market. And we just saw one, right? Watch this. I love doing this. So there's my large chart. And I'm going to bring up my small chart too, but I want you to see something. If you don't believe that fights happen at key areas, I'm going to draw a box just around this little stutter right at fibs. And I'm going to open up that refinement chart. And I want you guys to see what that fight looks like on a smaller, faster chart. Below, above, below, and just snaking right around that key area. This is the fight, guys. This is what we never have to be involved in because we know exactly where it's likely to happen. So rule number 2 is designed to keep you aware of where those fights can happen. And it's pretty easy to recognize. The first thing that must happen is price reaches the area. This is what sets off the fight. This is what creates the decisions, right? If the sellers are in control and they reach support, some decisions are going to be made. Maybe the sellers exit their position. Maybe there's a boatload of buyers waiting to counter their position. Or maybe, like we just saw, they're going to fight for a minute. Guys, we don't know what's going to happen. You'll never know what's going to happen. So your best bet is if price reaches an area and the triggers remain above support or below resistance, this area is a termination condition. And if I have a termination condition present, it's not a clear path, which means that rule number 2 isn't met, which means I need to just sit on my hands for a minute and let's see what happens. Guys, once price reaches the area, it's all on the triggers. It's not got anything to do with price again. So if your small triggers absolutely smash through the area, but your large triggers lag behind, this is what it looks like when that momentum gives you the potential to break, guys. It takes odds favorable momentum to recognize the potential to break. So if you bypass rule number 1, if you don't learn what it looks like to have the strongest triggers ever, you might mistake weak triggers in an area for the potential to break. So make sure that you're good with rule number 1. But we're not going to consider this area broken. We're going to consider it only potential. Rule number 2 not met. It will be broken when both the small and the large triggers, both lines of both, get below that area of resistance. That area now behaves as support, guys. It is a clear path until you reach the next area. And you're going to see this, once again, all day long. Where's my large chart? You're going to see these key areas stop the market cold. It comes up, it hits the area, the triggers don't break, and it reverses the market, right? Let's see if we can find another one. Yellow 1-to-1s, weak triggers. Sure enough, the market goes up. Here it happens at support. Here it happens at a divergence high. Here it had the potential to break, but it never did. The market pushed up. Here it had the potential to break, but it didn't. The market pushed up. You guys see it? And then look at this. Weak triggers almost makes it, hits it, reversal, sets it off. If you scroll back, and guys, you have the ability to scroll back 10 days. 10 days on your large chart. Go back and start taking pictures of the market reversing off of these key areas. Go back and start taking pictures of the trigger lines breaking through areas and get that recognition between terminations and strong or broken areas. And then this picture is the reminder that 90% of your day is really just reading indicators. 90% of your day is waiting for your advantages to come into place. One of the hardest things you'll ever do is commit to the idea 100% that either your rules are met or they're not. And if your rules are met, you'll take a trade, and you'll do it without hesitation because you're going to study these trades and you will realize that they do in fact win more than they lose. That's the hardest part of day trading, guys, is doing absolutely nothing when there's nothing to do. The market comes down and it hits yellow 1-to-1s. And guys, every time price hits an area, in the moment, it's going to be a termination condition. Every time price hits an area, for that split second, it's a termination condition. The triggers remain above, and the rules say don't go short. It keeps you out of a loser here. And then price bounces all the way up. Somebody was waiting right there at that key area that you guys knew about long before you got there. And that price bar pushes all the way up into resistance. And do you notice that the triggers are below? We go right back into that process. Price reached an area, where are my triggers? So I can't go short and I can't go long because rule number 2 is not met. And then my trigger lines don't agree, which means that I can't look for a trade because I don't have momentum. As a brand new user, resistance doesn't break, the triggers don't agree, and guys, this carries on for like 45 minutes. Price reaches a mid band, and you're thinking, oh, here we go. If those large triggers remain a full bar away, that's when mid bands on your large chart are termination conditions. If price is a full bar away, guys, price loves to come back to large triggers. This is a termination condition, and you're still sitting on your hands. For 45 minutes, you're wondering how you're ever going to make any money in the market. For 45 minutes, you're like, this is crap. How can I ever get paid if my rules are never met? And your brain's going to tell you, hey, chef, your rules are never going to be met. It's been 40 minutes. You might as well go live under a bridge. You're never going to get a trade. Take a trade, chef. Take a trade, Bree. Donna, why are you not in the market? Break your rules. You're missing out. And you've got to fight that. Because eventually, you do get momentum. And eventually, you do have a clear path. And you'll be able to use that refinement chart to pinpoint exactly where the market is most likely to continue. And you'll be able to take that trade and keep every dollar. If you don't get caught taking trades when the rules aren't met, if you're not giving away money needlessly. Man, chef, me too. That little devil on my shoulders has a sultry voice and brass knuckles. So if the sultry voice doesn't get me, punches me right in the side of the head, makes me do stupid stuff. It happens to everybody, guys. So we're building habits on Simulator right now to follow our rules. We're building good habits on Simulator to learn to be patient, to wait for the best of the best. Because the best of the best is where you get paid. So guys, I'm going to ask real quick. I just want to make sure everybody's on board. Lines on a large chart are where decisions are made. Lines on the large chart are where sometimes we have to stop trading. Lines on the large chart can be problematic. Is everybody good with that? Lines on the large chart. This is where termination conditions happen. Sometimes price doesn't reach one of those lines. Sometimes you have odds favorable momentum and it doesn't reach a line. And you're like, man, I can't wait to go long. Let me get that pullback. Guys, there's one termination condition that's going to help you recognize these turning points that the large slow chart can't show you because the information's coming so slowly. And that's 3 divergences in the same price range. 3 blue lines from a low, 3 magenta lines from a high, guys. All divergences, it means that price went down and back up, created a pivot. And at the time of this pivot, the momentum didn't follow. So like the speed of the market is lagging behind price. Divergence 3 times in a row, same price range, it may terminate the trend, guys. Divergences break the exact same way areas break. So if I have 3 divergences and my small and large triggers don't get below them, these are still in play. If the small and large get below the divergence line, the count resets. But 3 in the same price range may terminate the trend. It becomes more powerful with those anything can happen triggers. It becomes even more powerful when the third pivot's higher than the previous from a low or lower than the previous from a high. Guys, this is the only time on a smaller, faster chart I'll say to myself, dag nabbit, I don't have a clear path. You're going to use these 3 divergences on a low or a high to help identify these turning points when the large chart can't give you that information fast enough. And you're going to see it, guys. You might even be in a trade. You might be in the perfect trade and you're like, I'm going to hold this forever. And then a third divergence prints and is going to allow you to manage out of that trade. This is one of the ways that you can preserve equity. One of the ways that you can keep your profits yours. So, large chart has to have strong triggers for the brand new user. This is the advantage of momentum, guys. This is the one that I try to never live without. Large chart should not be trading into an area. If it is, we're going to pause. We're just going to wait. We're going to see what happens. But once I have momentum, and once my path is clear, guys, I'm going to let that small crowd jump in. I'm going to let that small crowd, everybody remember, they create a fight, that little pushback. We're going to take advantage of that, guys. In rule number 3, the rules for entry say that I'm going to use a limit order. I'm going to be able to recognize with such accuracy where the market is likely to continue that I'm going to wait for it with a limit order. And I'm going to have that limit order sitting in an area. Fibs, mid-bands, and yellow 1-to-1s. Lines on the large chart are problematic. Lines on the small chart create bounces inside of triggers that are going to help me pinpoint my entry. And that's kind of the key, guys, is those areas have to be buried inside of triggers. And I'm going to show you the best of the best look on those triggers, but I want you to see the 2-chart concept. Large chart says up with a green background. Large chart says odds favorable momentum, separation between the small and large. Everything is wide, angled in the direction of the trend. Large chart lets me know that I have a clear path because it's trading all the way up here where my pointer is. And both the small and the large triggers have gotten past resistance. Resistance is now behaving as support, and I have not reached the next area. Guys, rules 1 and 2 are met on the large chart. Is everybody good with this look? You should study this look because this is what it looks like when it's time to take a trade. I talked about pinpointing, where that tail is most likely to form, guys. We're not trading tails. This chart is way too slow, and by the time you know there's a tail, it's all the way up here. So once the rules are met, we're going to go to the small chart, the faster chart. We're going to let the small crowd do their thing. Guys, inside of this one bar is this entire pullback and this entire return. All of this information happens inside of one bar. So we're going to let the small crowd fight. And one of the cool things about these large triggers, guys, is price comes back to them all the time. Price loves to pull back to these triggers. Price loves to pull back to large triggers. You even see it here. Reach a mid-band. Large triggers don't follow. Price loves to pull back to those large triggers. So what we've done on the smaller, faster chart is we've taken the large triggers from the large chart and we've taken the large triggers from the small chart. And when those two triggers are overlapping, one on top of the other, like snakes riding piggyback, we're going to call this favorable large triggers, guys. Favorable large triggers, it makes me giddy. I tingle all over because what a great word, favorable. This is where advantages happen, guys. When my correction point from both the large chart and the small chart, where I expect price to return to, are one on top of the other, this is going to help me pinpoint my entry. This is going to give me the least amount of risk and the utmost confidence because I've got to put areas inside of those trigger lines to give the market something to bounce off of. And the tighter these are, one on top of the other, the least amount of room there is for areas, which means the least amount of risk that I'm going to have, and the accuracy will be overwhelming. Once these trigger lines start to separate, now I have a correction point from the small chart, and I have a correction point from the large chart, and they're nowhere near each other, which means that my accuracy is decreased. It means that my risk is going to grow. It means that it becomes more difficult to pinpoint exactly where the market is likely to continue. So for you brand new users, this is your best of the best. But as you grow with the software a little bit, you're going to find advantages with that split. You're going to create a plan to understand where the entry is appropriate. So how do we pinpoint? The first thing, and I'm going to say this real loud, is the large has to lead the way. The large chart has to tell you that you have the advantage of momentum with strong triggers. The large chart has got to tell you that you have a clear path because price has not reached an area and those trigger lines have cleared the previous area. And once that happens, with everything screaming north on your large chart, those yahoos are going to start a fight, guys. That small crowd's going to fight, and you're going to see it in a reversal bar. The reversal bar begins to pull back. The reversal bar is not your entry. The reversal bar is not an entry to a trade. The reversal bar only says, hey, let's get ready to pinpoint. So the first thing I do is I find my trigger lines, large and synthetic, and I want them overlapping, and I want them one on top of the other. I want them to be favorable. And then once I've identified my trigger lines, there's your red box, I'm going to create what's called the window of opportunity. You Ric Flair fans may recognize it as the woo. From the highest point of support to the lowest point of support inside of favorable large triggers. Guys, this shaded blue box is where the market is most likely to continue. This shaded blue box is where the market is most likely to bounce in the direction of all that momentum in that clear path. It can be a fib. It can be a mid-band. It can be a yellow 1-to-1. It doesn't matter. This could be a 1-to-1. This could be a mid-band. It's an area, a line inside of triggers that create the bounce. The more lines you have, the bigger the window may be. The more split the triggers are, the bigger the window may be. But this is where the market is most likely to continue. And because of the momentum on the large chart, because there's nothing to create a bounce on the large chart, your job is to activate a limit order just a couple ticks above that window of opportunity and hope that the small crowd gets to you. This fib is beyond the trigger lines, guys. The trigger lines are where I expect price to correct. I do not want to wait for it to get to the other side of that correction point. At this point, my advantage is gone. I no longer want to be in that trade. What about short trades? Wait for the reversal bar when everything says down with a clear path, with momentum. Wait for the small crowd to fight, guys. It's not your entry. This is your cue to find your triggers. Large, synthetic, create a box around them. Are they overlapping? Are they one on top of the other? Price is going to hit those trigger lines. That's not your entry. Rule number 3 says that I'm going to sell a pullback at an area inside of those favorable large triggers, guys. And sometimes you're only going to have one area like this. This is a mid-band. This is the smallest window of opportunity you could ever possibly have. 2 ticks below is where your limit order goes, and you're hoping the small crowd gets to you, guys. And I'm telling you, once you can find these entries, once you can identify momentum, once you can recognize a clear path, once you can pinpoint where the market is most likely to continue, you have in your possession a plan capable of making money every day. You have a plan capable of giving you a trade that wins more than it loses, that creates confidence, that allows you to pinpoint exactly where the market is likely to continue. And that skill set is also going to let you know where the market shouldn't go. Trigger lines are where I expect price to go. That's my expectation. Every time price pulls back, I expect it to go to the trigger lines. And I don't differentiate. I don't ever know if it's going to be the large or the synthetic. So my expectation is that price may go somewhere from here to here. And price may go from somewhere here to here. And I'm going to give it something to bounce off of, guys. I'm kicking a soccer ball as hard as I can, and I don't expect it to bounce until it hits something solid. I'm throwing a tennis ball as hard as I can, and I don't expect it to bounce back until it hits the wall. So embrace the language. Areas inside of favorable large triggers, guys. It's going to pinpoint. And once you know where it's likely to continue, you know where it shouldn't go. It shouldn't go 4 or 5 ticks beyond those triggers, guys. If it does, I'm going to exit the trade. That's where my first stop goes. The small crowd wins 20 to 30% of the time. That's what allows us to win 70 to 80% of the time. So don't get surprised if it stops you out every now and then. Every 100 trades you take, you're going to lose 20 to 30 of them if they're all high probability trend trades. Don't get nervous and tighten stops too soon. Let it play out. Guys, we're good. I mean, we're good, but we're up against thousands and thousands of people trying to make their money as well. It may go a tick or two past, right? So understanding where the market is likely to continue gives you the ability to recognize where the market shouldn't go. This is your first stop placement, guys. And by waiting for the pullback, what happens is once you get a reversal bar in the direction of the trade, you can reduce your risk. So even if it's one of those 20 to 30% doomed from the beginning, your losses can be tiny. Your losses can be $40 or $50 a contract rather than $250, $300. And that's kind of the magic of the entry, guys. And by waiting for the pullback, at the top of that big bar on the large chart, you might be 5 ticks from fibs. But because you're buying a pullback to areas inside of favorable large triggers, guys, suddenly you have 27 ticks to those fibs. Don't get fooled by small triggers turning. Momentum is defined on the large chart. Don't get fooled by fluctuations on the small chart. Insist that it hits that area. Guys, this is a tiny little chart and there's going to be fights all day long on it. Make it go to your entry. That's the only thing that you'll ever be in control of, is whether or not your rules are met, guys. And when your rules are met, what you're going to find is that the market loves to pull back to areas inside of favorable large triggers. The market will have a very noticeable fight right at those key areas. So we're just going to practice. Let's get on simulator. Let's mess a few things up. Let's break some rules. But can everybody give me a why? Price reached yellow 1-to-1s. My trigger lines haven't broken. Rule number 2 says don't go short into this area. Not yet. Everybody see it? Is anybody feeling left out though? And they're like, man, I just want to go short. I didn't catch anything here. I just want to go short, Mark. Well, it might work. Who knows? But 60% of the time, these termination conditions work every time. And it's weak triggers, right, D? D's like, Mark, my money's worth. My money is worth having advantages. My money is worth the best of the best. And guys, you got to be able to recognize these things at a moment. You've got to understand termination conditions. You've got to be able to know the difference between strong and weak triggers. And that's what's going to get you to where you want to be. That's what's going to turn you into a chart reader. So I created this document, and I'm going to tell you guys right now, if you don't have anything going on this weekend, even if you don't want to finish 25 pictures of each, go do 5 of each. It'll change your life. But if you really want to be a chart reader, guys, if you want to be able to know whether or not your rules are met at the drop of a hat super fast, go take 25 pictures of strong triggers and weak triggers. Go take 25 pictures of a clear path and termination conditions. Go take 25 pictures of that 50-50 look, that potential to break, so you never think that it's a clear path. And then take 20 pictures of those entries, guys. And what happens is you're like, oh my gosh, I'm never going to get stuck out trading weak triggers. I'm never going to hope that the path is clear. But you can't just take a picture, guys. You need to go back and talk about the whys. Why is it strong triggers, right? And guys, this is what the 101 section on the on the spreadsheet is. So strong down. I'm going to click on that picture and let's see what it looks like. Strong down, as it loads, looks like smalls below the large are wide. They're angled in the direction of the trend. But I didn't just take a picture, I annotated this chart. Smalls below the large, both are wide. Space between means odds favorable momentum. Strong triggers, rule number 1 met. And I promise you guys, if you look at 25 pictures, if you take 25 pictures and you annotate 25 pictures with exactly what you see, exactly why your rules are met, exactly what it means to you, where it starts, where it ends, guys, you're never going to get stuck out trading without strength. And strong triggers on a large chart is the same look as strong triggers on a small chart, a range chart, a week chart, a month chart. So if you want to get to where you're going the fastest, I want you to steal this chart reading 101 and I want you to go through this weekend and I want you to take those pictures. I want you to stop believing the fallacy that you have to be in a trade to become a better trader. Most of your foundation is going to come through study. And if you need a little help over the weekend identifying, I'm going to be somewhere else, what's it look like to have momentum? This is your high probability trend trade checklist, guys. This is what it takes to get you in to a high probability trend trade. Let me show you this one too. I'm going to give you a printable version of it. You can print this out, put it on your desktop. These are the rules that I want you writing on your chart. Let me know that you understand. Use the language so that you can associate the language with the look. Never had anybody follow this to the letter and do worse than 70%, guys, ever in the history of this checklist. But here's what it means. Is the market coming from a good top or bottom? What does that mean? That means that one of those termination conditions, price reached an area, none of the triggers broke through, actually reverses the market, changes the entire direction. The decision made at the key area was so stinking strong and immediate that it sets you up for the highest probability trend trade ever. You don't have to have one. You can have odds favorable, clear path in an entry area, but if you do have one, it adds some giddy up. There's your strong triggers. There's your weak triggers. You should never confuse the two. There's your termination condition. There's your potential to break, not a clear path. There's your broken area. Now the path is clear. There's your window of opportunity for a short. There's your window of opportunity for a long, guys. And this describes the whole process. Reversal bar starts it. Identify your triggers. Where are your areas? Where does your limit order go? What's not in the window? There's never any reason to be confused if you do just a little bit of study to get you where you want to be. So there is, whoops, that didn't go in. Hold on. Here is, golly, why is it not doing it? There we go. There's your high probability trend trade checklist. There's your high probability trend trade checklist with pictures, guys. I just dropped them in the room. And you know what? Let me drop my spreadsheet in the room too, because this has a great start on that 101 section for you. Feel free to study my pictures. I want you guys to succeed. Let's take some of the draw off of the computer because, guys, now I'm going to give you the keys to the kingdom. Now I'm going to give you the golden goose. Now I'm going to give you the KISS plan. And the KISS plan, ladies and gentlemen, is the high probability trend trade. This KISS plan is a stepping stone in your learning journey. This KISS plan is designed to optimize your chances of success with the high probability trend trade. This is the plan that typically wins 70 to 80% of the time. This is the trade that's creating confidence. This is the trade that's teaching you to read your indicators. And then through simulation, study, class feedback, continuous practice, you will be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, that is AI coming in and saying, hey, guess what? With a little bit of time turning into a chart reader, you're going to start to see more opportunities. You're going to see those opportunities today in the room. If you're not comfortable with the high probability trend trade, guys, understand that those opportunities are coming. This is a stepping stone. This is not the end of the road for you guys. Very often, people say, well, I see so-and-so doing this, and I see so-and-so doing that. If you can't understand these very basic concepts first, you're going to have trouble doing what so-and-so is doing. But once you have this foundation, it's going to start to come into play. So your simple plan for consistency, guys, two of my favorite words, simple, consistency. That's exactly what you need to be successful as a brand new user. Your simple plan for consistency says don't fight the large chart. And this is the old book, How to Commit Financial Suicide in One Easy Step by John Novak. There's only one page of information, guys. It's a pretty easy recipe to commit financial suicide. And it begins, if you're trading against strong triggers, if you're fighting the momentum established by the big crowd, if you're trying to be that small fish swimming upstream against all the sharks, guys, you're more likely to lose than win. This is one of the most common mistakes that we see. And then the most broken rule, new users, is trading into those large chart areas, not waiting for them to break, not waiting for them to reverse, guys. Seek help immediately. So your simple plan for consistency, guys, it says don't fight the large chart. Don't fight the large chart. And then you've got to define your entry, and it's got to be your entry. I want these to be your rules, guys. Nexgen's going to give you the plan, right? But the second you take possession of this KISS plan, it is no longer the Nexgen KISS plan. It is, Chef, I'm just picking on you today. It's Chef's plan for the high probability trend trade. It's Paul's plan for the high probability trend trade, right? You thought you were going to get away, didn't you, Clara? It's Clara's plan for the high probability trend trade. And this is what whoever takes possession of this plan is going to commit to as their own rules, because when it's yours, you might be less likely to break them. These are my plans. This is my rules. And guys, once you get into the market, once you define that entry, once you know exactly what it takes to pinpoint exactly where the market is most likely to continue, once you take that beautiful entry right at the area where the market is most likely to continue, and you've taken it because of all that momentum, because of that clear path, you've got to do something with that great entry, guys. That's where management comes in. So your management plan, brand new users, it should be as mechanical as your entry plan. Your management plan should do everything possible to remove your emotion. Your management plan should pull your fears out of it. There should be no opinion. So your management plan, according to the KISS plan, is extremely if-then. And if you just ask yourself, if you're honest with yourself, and if you guys want to open yourself up to be vulnerable and be honest with the room, who studied their entries and said, man, I'm going to nail this entry, and then just hoped that management would work itself out and let fear dictate exits and let trepidation move stops? We've all done it, right? So I'm telling you guys, jump on the simulator and let this play out. Let this play out, because what happens is you become really good at trusting indicators if you remove your own emotion. So everything begins with the best of the best entry, where the market is most likely to continue. You've got to trust in your heart that this entry is going to win more than it loses, and you have to be willing to put your stop where the market shouldn't go, and you're either going to get stopped out. It's a cost of doing business. It's a normal part of a positive equity curve. 20 to 30% of the time, guys, that's your result. But 70 to 80, all those sellers are going to take over with the momentum and the clear path, and you're going to get a reversal bar in the direction of your trade. And once you get that reversal bar, I'm not keeping my stop way the hell out up here. I'm 2 ticks above it. I'm reducing risk, because even if this one fails, I'm not taking a full loss. No way. But guys, here's the deal. They're going to have to come get me. I'm not going to arbitrarily move it below resistance. I'm not going to leave it sitting in that correction point. Those sons of guns are going to have to come up here and get me. More often than not, they're not. And we're probably going to make it to that first target. So for you guys, as a confidence builder, that first target's only $100 off in the distance, guys. $100. And if it hits $100, guess what? I'm paid, and I feel good, and my palms aren't sweaty anymore, and the butterflies in my stomach have flown south, and life is pretty good. And I'm saying, wait a minute, there might be something to having this great entry. And not only am I going to get paid, guys, I'm going to go break even. And I'm going to tell you right now, break even is not the best stop. Break even is not the stop that's going to keep you in more trades. But break even takes all of the anxiety, the fear, the panic out of holding for the second stop, because now you have nothing to lose and you've been paid. And the cool thing is, more often than not, with all those advantages in place, guys, that bad boy's run into your second target. And it's only $200 away from your entry, which means one trade, every advantage, $300 trade, guys. One trade with every advantage, $300 trade. But Mark, I can't make a living off $300. $300 isn't enough money. Guys, if $300 is the best that you do every day, and I'm telling you right now, you can do much better than this with a solid plan. If $300 is the best that you can do every day, there's 252 trading days in a year. That's a $75,000 year, guys. What if you start gaining a little experience and you double it and you make $600 a day? Whoa. And guys, it's going to keep going like this, right? What if you can make $1,000 a day from the same simple trades? Is anybody in here making $250,000 a year, working 3 hours a day, golfing the rest of them? You can. It's possible. The potential is there if you're following a plan, if you're focused, if you're willing to say, you know what, price reached an area. Let me cancel this out. Price reached an area. I'm not going to trade into it. I don't have momentum. I'm not going to trade into it. This is not my trade week triggers at a fib. And you have to be okay with the idea that sometimes they're going to break and you won't be a part of it. And just because this one broke, you still have to say, damn it, I can't trade into this area. My rules aren't met. And if you're patient, all of a sudden you start taking this momentum style trade because you see more. And guys, that was a great opportunity. Did anybody catch that? When the small triggers broke through and it snapped back to the 1-to-1s? Someone's probably going to show me that entry. And it won't be a high probability trade entry. So guys, did I drop the KISS plan in there? Let me give you guys the KISS plan. This is my first hour every day. So you brand new users, you have everything that you need to be successful with this software. Izzy got game? You have everything that you need to be successful with the software. Adamos, you have everything that you need. Kenan, you have everything that you need. Andrew, Pete, Kenny, Jen, Vittorio, Gary, Red Rob, GWC, and Malcolm. You guys have every tool that you need to be successful. You have everything that you need to find more winners than losers. But the only thing that Nexgen can't provide you is the experience. We can't provide you the repetitions. I can't force you to study. I can't force you to participate in the room. Andy, we'll see you in the third hour. So this is where I lovingly remind you guys that if you really want to be good at this, if you really want to be a day trader, a chart reader, if you really want to turn this into your career, guys, start posting in the room. Take advantage of those private sessions with me. Tell me what you're doing. Tell me what you're seeing. Tell me why you're doing it. And let's find a way to make sure that you're doing it consistently and profitably. Let's make sure that you have the least amount of risk. Let's make sure that you have the highest profit potential. And then most importantly, guys, don't omit using the spreadsheet. Don't omit using the spreadsheet, guys. Even the CME says if you're going to be a day trader, you need a trade journal to track your progress. Nobody's ever gotten good at anything by just doing it or watching videos, right? Guys, you can play golf 1,000 times and still be a horrible golfer, but if you go through and you practice the process, you become a better golfer. You have to learn the process that yields the results. And then you have to build your plan, and your plan will grow as you grow. But guys, if you have 350 pictures that you can study to create recognition, why on earth aren't you clicking on them? If you have the entry sequences for long and shorts that describe what you have to do to find that perfect entry, why aren't you looking at them? Management plan, right? And then ideas to get more out of it. Guys, do me a favor. Are you guys using TechSmith? I need you to put a link in the room if you could. Grant, instead of showing me the copy paste, I'll pull up TechSmith and let me show you guys why. Well, of course it just did up. These blur out, and when I click on them, they don't come up for me. Well, of course now they're going to. They're going to make a liar out of me, which is cool. So maybe these are going to work today. So we'll be all right. So on Capture, all you have to do is instead of hitting copy, hit upload, and it'll give you a link. It'll give you a link to screencast, and you can drop that one in. Izzy, are you taking pictures of your screen? I love it. So Izzy, go to your search bar right here and type in TechSmith. That's okay. We're going to do this right now because this is important. Go to your search bar and type in tech. And you should see TechSmith Capture. And TechSmith Capture is downloaded when you download the software. If for some reason it's not there, for some reason you can't find it, let me get you a link. It's a 2-minute download. So if I go to the education page and the software guide, screen capture programs and how to share in class, guys. Let me give you the link too. This is the link on how to share in class. And then this is the link. Well, it's right there on the link I gave you. This is the link. Copy link address on how on TechSmith Capture, where to get it if you don't have it. But TechSmith Capture, guys, this is how we have a conversation. This is an important tool. Posting in the classroom is a super important tool. So let me open up my TechSmith real quick. And we'll get it in and we'll do a little run on how to share in the room. And look, it did break, right? But not until it stopped you out of your short. They're pummeling crude oil a little bit. But notice that it stopped and dropped. Key area, untradeable bounce. Key area, untradeable bounce. Pretty cool, right? So guys, this is my TechSmith Capture. And if I click that big red capture button, this is a click and drag tool, guys. So if I hover over just one area or one chart, it's only going to give me one chart's worth of information. So I'm going to go to the top of my left chart, my large chart, and I'm going to drag it all the way down to the bottom. One thing that's very helpful, guys, is get your timestamps in there and get your prices in there, because we're going to compare the large chart to the small chart. Once you release the mouse, it's going to give you one of these. The camera is going to let you take a still picture. And then for you guys that are a little more advanced, do this a couple times and capture a video and talk yourself through exactly what you see. You guys working on management, talk yourself through everything that you see throughout the course of the trade. Talk about your triggers, talk about your strength, talk about your path. Ask yourself what's changed. This camera makes people amazing with management, but I'm just going to hit the camera rather than the video, and it brings up this image preview. And guys, this is just the picture of what I took, but this isn't in the room yet. Just doing this doesn't put it in the room. I need to go through. This is arrow. These are click and drag. If I left click down, huge arrow, go back up, short arrow, maybe I want to put it right there at that termination that reversed the market. I've got shapes. Maybe I entered the market right here. And it's easy after the fact to say, that's exactly where I would have gotten in. Everything's set up here. But I want you to do it. And I want you to take this call out and left click and drag. And it's going to, whoops. And it's going to give you a text box. And this is where you write what you see and why you did what you did. And this is how we have a conversation, guys. This is how I'm going to do this. If you drop just a picture with no annotation and then you try to give me a dissertation in the chat box, guys, I'm scrolling through 1,000 chats here. It's difficult for me to do. So tell me everything that you see on this. And then once you have that, I want you to upload. Blue button in the bottom right hand corner. And it's going to say upload media. And it's going to give you this screencast web address. Simply click copy and come over to the room, Control V. If you're in the pop out, just paste it if you're not. And that's going to drop that link in there, and that's going to give you the picture, and this is how we're going to have the conversation. The cool thing is this link is stuck to my clipboard, so I can go, if I took a trade, and I can drop it into my spreadsheet so I can come back and study it. And I'll paste it in there, and I'm turning this into a hyperlink. And just above it on the spreadsheet that I gave you, or how to paste in the spreadsheet, how to turn it into, no, not at all, D. And we'll go back and we'll talk about why. Okay, good. Right on. And guys, that's an important part of it. Get those in there. So D, let's go back to the picture. Because D said, hey Mark, was that a high probability trend trade? D, did I have odds favorable momentum? No. Did I have a clear path? No. Did I have areas inside of favorable large triggers? All three advantages gone. But it went down anyway. How come? Because I'm not in control of the market. Because somebody wanted it to go down. Because somebody said, I want this to go down more than they want it to go up. But here's the deal. You don't have to catch every move in the market to be successful with this software. Catch the best moves. Get paid. Be patient. Understand that if you spend 6 hours in front of the market, 360 minutes in front of the market, about 36 of those minutes are going to be spent trading, guys. Isn't that crazy? If Elon Musk called you right now and said, hey, D, I've got a job that you can make $250,000 a year at, but I need you to sit in an office for 8 hours and do nothing except for 45 minutes of it. And when it lines up, I want you to click a button. Everybody in this room would say, hell yeah, I'll take that job. 90% of you would get fired in the first week because you can't do nothing when there's nothing to do. I'm the king of distraction, guys. I have a sketchbook on my desktop, or sometimes I have my iPad with the pencil. I play video poker off to the side. I play video Scrabble off to the side. And what I do, guys, is I focus on my large chart. And I don't even look at my small chart. Some days I'll just blow it up like this. And I'll simply say, until I have odds favorable momentum and a clear path, I'm not even going to look at the small chart. Because the small chart is the siren song. The small chart are those jerk faces that create little fluctuations. And they're like, come take a trade. You know you want to take a trade. Why aren't you in a trade, right? And the cool thing is eventually, where there isn't a trade, suddenly a trade materializes because you're a chart reader. Suddenly, you find a way to grab a little piece of the pie. And you don't focus on home runs every trade that you take because you know that if you can catch $100 a time and you only do that 5 times a day and it's super high probability and low risk, guys, then you're making more money. And that's what it's about. So that's my first hour, guys. It's the same hour every day. Build a foundation, have a plan, ask for help. That's it. That's all you have to do. Once you do that, everything else is going to work itself out. Crude oil is in a crazy Friday downtrend. So I'm going to open up my S&P charts during my break and let those load. But I'm going to go take 5 minutes. So one of the other ways that you can avoid taking trades that you shouldn't be taking is get the hell out of your seat every now and then. Walk away. Because the longer you stare at your screen, the longer you try to make something happen because nothing appears to be happening by the rules, the more likely you are to fabricate a trade. Trust me on this one. So I'm going to walk away. Whoops, that's the wrong picture. That's a good one, though. That's a good one. Damn right it's #1 day trading software. You just got to learn how to drive that car. So I'm going to go take 5 minutes, guys. When I come back, we're going to start looking at all the pictures that you posted. Every picture that I look at, I'm going to go back to momentum, clear path, and entry area. Every picture. I don't care what kind of trade you're taking. I'm going back to momentum, a clear path, and an entry area because this is an educational room. So if you're taking some batshit crazy trades, at least tell me why. And I'll tell you, you might have gotten lucky, but I will always look for victories. I will always look for the reasons why your crazy trades are working. And who knows, maybe we discover a new trade. So, guys, go hang out for a minute. Get a drink of water. Pet the dog. I'll see you in 5. All right, guys, I'm still calculating here, but I'm going to go through to the very top of the chat box, and I'm going to start clicking on the pictures that you guys have been posting. We're going to talk about them. We're going to talk about them in terms of momentum. We're going to talk about them in terms of a clear path, and we're going to talk about your entries, guys, and that's all we're going to do. Jonathan, today, 7:55 a.m. Everything says down. Momentum is strong. You did have those split triggers and it made it up to the higher resistance. And Jonathan, you took a jump in trade. You just jumped into the market. That's cool, right? You let it clear trouble. You jumped in. You have momentum. Everything says down. You said you made some money on it. Nice job. Why? Why did you jump in here and not look for it up higher? Just curious. Divergences, 2, not 3. I like the trade, letting it break. Make sure you talk about why. Why I did this. Why did I jump in? Jen took the exact same trade, but took it from an area not inside of favorable large triggers because your triggers are split. But guys, this is an absolutely outstanding, what's the word I'm looking for? Representation of how when there's 2 correction points, it could go to either. And it did, didn't it? It bounced off the area in the first correction point, and then it went right back up to the second correction point. When you have those split triggers, you have to understand that this is a possibility. If you get in at a mid-band, the place where the market shouldn't go is all the way up here. So sometimes you got to say to yourself, I either need it from up here with lower risk, or I'm just going to have to miss it. And Jen did a great job in at the fib. Momentum, she knew right where the market was likely to go and rode that wave of momentum all the way down. Absolutely beautiful trade, Jen. Nice execution. And then Jonathan, this gives you an opportunity to go back and maybe you find better entries. And start working towards giving yourself a little more freedom to manage these trades. Nicely done. Nicely done. And Jonathan, I love that you got paid on yours too. Jen, great job getting paid on yours. That's what it's all about, right? Let's make some money. Let's quit our jobs. Let's go buy an island. Let's buy Nexgen Island and drink pina coladas. That'll be awesome. And then Jen, these are one of those proud moments for me. Jen says, when no triggers go through a fib and it reverses the market, it's a strong top. But when the triggers make it through, it's not a strong bottom. It's a weak bottom. Jen, you get the microphone next week. Nicely done. And then Paul, I think you answered your own question, but I just want to make sure. When we talk about the clear path, when we talk about whether or not areas are broken, I drew this picture, so we'll use this real quick. And this is kind of how it works, guys. Initially, price reaches the area, the triggers are above, it's a termination condition, right? And then every termination condition that breaks at some point becomes the 50-50 look, smalls below, large above. And then once the small and the large get through, now the area is clear. Is everybody good with that? That's kind of what I teach every morning. First it's a termination, then it has the potential to break, and then it's broken. Guys, this path will stay clear. This path will stay clear right up until you hit the next termination condition, and then the process starts over. And then it'll start over. And this is kind of cool because once you go through the words, price reaches, let's go to triggers. Price reaches, let's go to triggers. What happens is, Paul, this was great, right? First it was a term, then it was a 50-50, and when it was a clear path right here, we were back into a term. So you never really had a clear path. you had to take that medium probability 50-50 to take advantage. And then it's a 50-50, and then it's a clear path, and damn it, we're into another termination. And guys, this is frustrating some days because you're like, crap, I can't get a clear path. And that's why we said that the high probability trend trade sets up 3 to 5 times a day, guys. But once you're a chart reader, there's all these opportunities on that potential to break. Once you can manage a little bit, then the floodgates open, giving you more opportunity to make money. So Paul, great picture, man. Thank you for posting that. And I can't stress enough, guys, when you post in the room, it opens the door for lessons. When you post in the room, it lets me know where you need a little help, where you're a little uncomfortable with something, where maybe a little clarity would pay dividends, and we'll turn it into the lesson every time. I promise. I promise. All right, Pete. Pete says the triggers are up. They're absolutely strong, and it's not quite a clear path. Your first entry is the momentum style entry. And then I'm trying to just follow it here on the time. So we're trading right around here. You take the momentum style, but don't exit with a loss of momentum. And then you do exit all the way over here after a couple losses of momentum. And Pete, I know that you're solid. Man, if I'm in at 41, I'm out with $100 into trouble, and I'm waiting for the next best trade. I know you guys love these jump-in trades, guys, but they're not home runs. And then eventually you get the 50-50 with divergence, and we lose. Hey, Chef, have a great weekend. This is the potential to break. When the potential to break comes from a bad bottom, it's less likely to work. When the potential to break has divergence, it's less likely to work. And when your stop is 1 tick beyond the correction point, not 4 or 5, you're not giving it room to work. So Pete, love the momentum. Crazy hold on that one, I think. And then this one it's a tough trade. And then jumping in, let me make it bigger. Yeah, Pete, you had so many opportunities in there, right? So your correct trade here, Pete, isn't into the area, it's from the area. Do you see the difference? Trading directly into the termination condition, and then take that same look, but let your triggers get over, right? It's a couple ticks difference, but you're not trading into the trouble spot. Get in, get out at trouble, get above trouble, get back in. These are tough holds. You're hoping a lot of things break, and you're hoping those retracements don't come back. And you're making money. It's hard to argue with money. But, you're going to start giving yourself heartburn, Pete. And I know you're solid, guys. And once I start seeing your trades, I'll recognize your patterns. I'll recognize and understand your plan. And I won't give you as much grief. I'll give you a little rib poking because it's all in good fun. But I won't give you a lot of grief. So much so, Pete, did you see this one? I dubbed it the Pete trade. We'll see if that comes up. Where I traded directly into a termination condition, but I did it with all the advantages. All right, Andy Man. I know you like the Big Mo. Andy, let me see where you did what you did. So over here you have odds favorable momentum and a clear path at 8:30. Directly into news, Andy. Directly into news. What a great way to get blown out the other direction. This one worked out for you. Congratulations. Trading directly into news. That's scary, dude. These are the ones that have the potential to not only go against you, but slip you. My biggest slippage loss into news, because I make the mistake too sometimes, was a $1,400 loss. A $1,400 loss. Because the news reaction was so violent, it took NinjaTrader that long to fill my orders. But I like it without. if you take news out of the equation, Andy, getting in on momentum, understanding where the market shouldn't go, and riding it down to the next fib. Beauty. Man, you got to watch that news, though. It'll get you. Whoops. What was that? Oh, there we go. It finally came up. Guys, that's why I'm asking you to use the screencast links for me. That one that I clicked 2 minutes ago before Andy's chart finally came up. Pete, this was just me having fun with you. Termination condition reverses the market. The best momentum ever directly into a termination. Guys, Pete's made a living off recognizing this pattern and getting paid at trouble. I saw it after the fact and I was like, oh, that's Pete's trade. So I take a picture. That's how well I'll recognize your patterns, guys. I'll be able to trade your plan. True story. I will be able to trade your plan if you actually have one. GWC. Divergence. Everything says down. The path is clear. The pullback to resistance inside a trigger. Just a good looking high probability trend trade. GWC. Odds favorable. Clear path. Pull back. It looks like you might have been in a little low. It's hard to tell. I can't see your numbers or the dot. But right there at the mid-band, right inside a favorable large trigger, sure enough, all that momentum carries it down to the fib. Absolutely beautiful. Grant, I clicked on yours, but it might take a minute to come up. Jonathan. Odds favorable, clear path. Not a weak top, Jonathan. Strong top. Triggers didn't break. Termination reverses the market. Gives odds favorable. And you jump in. And you jump right back out. And you want to jump right back in. Why not at the area inside of favorable large triggers, Jonathan? Why try to jump in so low? Why not wait for the high probability trade? Why not wait for the one that pulls right back to the mid-band, that offers the lowest amount of risk, that gives you the highest profit potential? Why are you so intent on jumping in at the bottom? High probability trend trades come from areas inside of favorable large triggers, not on a reversal bar that hasn't even happened. Good stuff. Growth, 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 growth. You're on their way. There it is again. Why not just pull back to the area inside of favorable large triggers? Make some money. First target, break even. I love it. Josh, nice trade. Guys, great entries create very manageable trades. Great entries create very manageable trades. Odds favorable, 50-50. Is it a clear path? I'm trying to figure out where we're at. Right here on this tail, D, do you see how you hit a big ugly fib and the triggers hadn't broken yet? Not quite a clear path. Down here it's a 50-50. Right here it's directly into a fib and it's a 50-50 there. So you say possible sell points. D, what are your rules for entry? Are we talking about a high probability trend trade? Can we do this? Can we change entry point sell? Entry points to sell. Can we change the language to sell a pullback at an area inside of favorable large triggers? And let's write this. Let's write this every time you see a trade, right? So here I have an area inside of triggers. Here I have an area inside of triggers, so I like it. This area is inside of triggers. I like it. And then here, your trade came from these two. Does that make sense? That was your trade. That was your trade. And what you've pointed out here is really nice. If you missed the entry here, that's kind of a little, hey, D, we forgot you. Let me snap back and get you look. I like it. I like everything about it. And this is just, you've been in my class long enough to know that the language for me is important. So if you say clear path up here, absolutely. But you're taking the trade way down here. Does that make sense? Odds favorable up here is awesome, but we got to make sure that it's odds favorable down here at the trade. Same thing with the clear path. Good stuff, D. You're on your way. You're on your way. Scroll up. Let's see who else I can harass this morning. All day long, guys. All day long. Jeffrey Dean. Jeffrey says, all of it. I want all of it. Just sitting on my hands waiting for a reversal. Jeffrey, isn't it amazing how rule number 2 could have kept you out of all of this? Look at that short when everything says down momentum, get out at the area, and then you just got to sit on your hands and let them figure it out. You just got to sit on your hands and let them figure it out. Wait for those advantages. Erla. Woo. Let's see what we have. Termination, Great Bottom, or Great Britain. It's one or the other. Odds favorable. Everything says up. You enter, you miss the mid-band. That's okay. You get in on the other side of trouble, and you get paid all the way up. And you're looking for that momentum style trade. Absolutely beautiful. And out at trouble. Erla. Guys, these aren't high probability trend trades. Her synthetics are still red. This is turning a great bottom, immediate momentum, beautiful. Paul, there's your 2004 trade that you nailed. When a fib holds and everything rockets, sell the pullback to the small triggers. There it is right there. Erla, nice trading. Both directions, making money both directions with momentum. How cool is that? Pattern to repeat or luck. On which one, Paul? And Pete, that is the same trade. Oh, you might have gotten lucky on it is what you're saying? That's okay. Sometimes lucky trades turn into... Oh, I haven't seen Morgan's trade yet. Let me get to Morgan's trade. Jen used to take this one all the time, guys. There it is in the room. Jen used to take this one all the time. And then she quit and went back to the high probability trend trade because she didn't have rules for it yet, I think. But guys, we started teaching this trade. Whoops, I accidentally opened up my Trade-O-Mate. I'm not sure how that happened. But we started teaching that 2004. Let a fib hold and pull back to it. And then you're good, right? And then this was Grant. Is that right? Because there was one that I clicked on that I think was Grant that may have finally loaded. Nope, that's not it. Grant, I promise I'm not skipping your charts, but they won't load up for me. There it is. This was you, right? No, that wasn't you either. Dang it. Who was this? I'll just click on it again. Sometimes I lose my place, guys. I'm old and there's lots of shiny things in my room. And I'm also scrolling through this entire chat box and everything looks the same. Erla. Was it Andy Man? There we go. The Andy Man can. Here we go. Let's see what happened. That looks like a trend trade. Everything down. Strong triggers. Pull back to resistance. Stop placement is good. You keep it where the market shouldn't go. Jump out for no reason at all other than get paid, and then get out again at trouble. And with that much strength, you say, let's see if trouble breaks. Oh, no, you did have a reason. Exited at trouble, And with all that momentum, hung on to just one of them to see if you could make a little more money. Andy, this is freaking beautiful, man. Nice trade. And Adriana says, hey, Mark, I'm doing this thing that when a termination reverses the market and I have all this momentum, I'm going to buy a pullback at support inside of triggers, and I'm just going to get paid all the way up. Adriana, beautiful trade. And then I'm going to read what Andy said because it feels good. I'm teaching beautiful things, rules that make money. Waiting may be the hardest part, but when you wait, it's worth it. Almost every successful day trader that's ever come out of my classroom, guys, has said the exact same thing. Hey, Mark, it's hard to wait. But what I've realized is that when I don't fabricate trades, the easy trades show up and I typically make money. Over and over and over. Steve Diego. Let me see where you're getting in. Down here, right? 902, 903. Odds favorable. Potential to break. One divergence doesn't scare you. Right to the mid-band inside of triggers and making money. Steve Diego. Beautiful. Gary, did I miss your quote? Repost it. I got an awful lot of stuff I'm looking. Oh, patience works? I think that's what she said. I will get to it. Scrolling back up, though. Let me see where we're at. Dun, 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 dun. All right, Jonathan. Someone gave you a thumbs up, Jonathan. Let's see what you did. Let me get rid of some of these. I'm going to keep the draw on my computer to a minimum. Jonathan took all the trades. Everything said down, you went down. Everything said down into a termination, it didn't work out. Everything set up, termination, strong bottom, beautiful, Jonathan. Odds favorable momentum. I don't know what the S, odds strong momentum maybe. You got your own language here. You take the perfect momentum trade. Jonathan, don't forget to cancel out that old order. You take the perfect momentum trade. And it's just money, 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 money. Dude, Jonathan. Rock star. Isn't this one easier than all of this nonsense not having areas to trade from, trading into areas? Isn't this one like damn near effortless? I feel like it is. Does gap theory apply here? Just above mid-band entry. Missed it typing. So Jonathan, that would have been a beautiful, beautiful entry without a doubt. Just didn't get it. No gap theory. So Jonathan, this weekend, if you want to study gap theory, I tried to click on your picture of the spreadsheet. This weekend, if you want to study gap theory, guys, if any of you are working on that idea of when the mid-band behaves as a termination condition, when things are patterns that repeat themselves, Jonathan, there's about 20 pictures of gap theory in there. Even on termination conditions, there's all sorts of pictures on what it means to have a gap theory. And the gap theory, that is not a gap theory picture. Weird. The gap theory, ladies and gentlemen, it simply says that if price accelerates away from those large triggers, if it zooms away from those large triggers and hits an area, and the large triggers are a full bar away, don't go short. It's like a vacuum. It's like a sucking noise pulling price back to those large triggers. So Jonathan, in order to have that gap theory, one, it's a large chart thing. It's a large chart thing. And then two, you're going to use this reversal bar marker to see that those triggers are actually a full bar away. Good stuff. Let me see where we're at. How we doing? New users, how we doing? We're railing through them, guys. If you have questions, make sure you're asking. Adriana, so Adriana, you're suggesting that when everything says up, when the path is clear, trading from an area produces nice results? Really nice, Adriana. You are on your game. And then Izzy and Grant. I'm trying to click on both of them. Grant, dude, I'm not ignoring you. But I can't seem to get y'all's pictures to come up, and I apologize. But I can't get the copy-pasted ones. I can only get the links. So if you posted a copy-pasted one and need the link, give me the link, and we'll take care of you. I promise. Pete, strong bottom, odds favorable. You and Jonathan are in cahoots. Look at that momentum trade. And then it turns into a trend trade. And you take it all the way to the next fib. Nicely done, Pete. Nicely done. Trading with momentum, trading with direction, using areas for entry. What a concept. And then once again, momentum, exit, almost jump back in at a nice pullback. You always call them nice. Anytime it goes up after, you call it nice. But we've got weak triggers. We don't have a broken area. You have divergence. There's no areas inside. Just didn't meet your rules. So great patience. And then, Pete, this is one of those times where if it's railing and it's good and you want to take a shot, that's where that reversal bar gives you an opportunity. Maybe use it for an entry. You have your risk established. And when you're making money like this, putting $100 on it isn't such a bad deal. Nicely done, Pete. All right, Grant, thank you for the link. I feel bad that I haven't seen what you're doing yet. Look at that, guys. 3 divergences, weak triggers, higher divergence. This sure looks familiar. Everything says up, potential to break, no divergence, perfect entry, money all the way up. Dude, Grant, perfect. 100% perfect. Guys, 3 divergences in the same price range, right? Everything's above, support, everything is up, tons of momentum, no divergence, beautiful entry. Oh, Grant, I don't think you could have done that any better. Guys, excuse me just 1 second. I'll be back in 1 minute. All right. Sorry about that, guys. Love it, Grant. Love everything about it. And then Gary says, patience works. This is NASDAQ. It's a little different. Termination, everything down. Gary hops in. And as long as that thing is screaming, man, Gary, beautiful trade. Beautiful trade. Awesome hold. Very nice. It's hard to go wrong with 87% winners. Beautiful work, Gary. It can be done. You just got to learn how to do it. Morgan. Perfect. Love it. Followed market right behind bar with stop because there was no pullback areas. Really? There wasn't? Just past the 1-to-1s. Beautiful entry. So, Morgan, you got a second? You got time for a little pep talk here? Where'd it go? Let me open it back up. Andy's like, I know what Mark's going to say. I know what Mark's going to say. Andy, have a good one. So check it out, Morgan. You're going to love this, dude. You are going to love this. It's going to change your life. Those small triggers. Nice, Gary. In a trade like this, and this is the key, Morgan, is there any indication that that's slowing down or stopping? There's none, right? Your large chart is as great as a large chart could ever hope to be. I love that. That's why you took the trade. So as long as you don't close on the wrong side of these small triggers, do you remember that lesson that says, don't fight this momentum, right? Don't go long, don't go long, don't go long, don't go long. Okay, now it's changing direction. You can use that exact same concept, Morgan, for holding these trades. And when I'm in a trade like this, I am literally, my stop is at the reversal bar. And every time the reversal bar goes down, my stop goes down. With this look on my large chart and this look on my small chart, I'm not getting out for anything less than a reversal bar. Does that make sense? This is it won't go up. It won't go up until it closes on the wrong side. It may fluctuate, but if you insist on a reversal bar, you carry this one all the way to the fib. And then, of course, getting out at the fib makes sense. And if you go back and look at it, you will see it 1,000 times. Let's open up a small chart here. As long as I'm on this side of the small triggers, it's going down. And once it closes on the wrong side, that's where things happen. All the momentum, there's your loss of momentum, right? That's my exit. If I'm in this trade, that's my exit. But it's hard. Look at that. There's your first loss of momentum right there. But it's hard because you will give back a little money, right? And if the challenge is Morgan, what if your entry isn't beautiful off an area like yours was, right? What if all you did was jump in like right here? Well, then you'd have to take a loss. And this is where people freak out, where they don't want to take a loss. So they start putting ridiculous stops in place. That's why you have to have a plan. What's it going to take to get you out? And man, using a small chart, Morgan, and riding this close behind price, you're going to get stopped out all the time. Because there's a billion people in the market. But if you insist on that reversal bar or the area, you're going to find that it's like no stress holding these. You're like, well, shit, it either gets me or it hits the area, whatever. I know exactly what it takes. And I'm telling you, that changed my management. That idea changed my management tenfold and almost doubled the profits that I took every day. Because the only thing that I would let take me out is a reversal bar. Great trade, though. Great trade. And let me read that. I guess the question is, do you think you got lucky because of where your entry was? No, I think it's on the NASDAQ. You're actually late on your entry, Morgan. Sorry, I didn't read that one. The rules say with momentum on both charts, once the small triggers break, I've got a limit order right here at these 1-to-1s. I got a limit order. Freaking come back and grab me. And look what it did. It bounced right off of it, didn't it? So this tells me two things. One, you recognize momentum and you're comfortable with it. Two, you don't have a plan for entry. You're not following a set of rules for entry. Otherwise, you would have been in at those 1-to-1s. Does that make sense? Doesn't it suck when I notice things like that? You took an emotional entry, which is why you had an emotional exit. It's okay. I'm not mad at you for it. I'm not calling my wife and tell her Morgan's butthead. But what's cool, Morgan, is that you were so close to a rules-based entry, which means that you understand all of the advantages. It means that you understand the direction, the momentum, the clear path. But Morgan, wouldn't it be awesome to get in right here, and the only thing that could take you out is a reversal bar? So you've got like this super cool established risk, and then having a plan for exit that says I'm either going to hit the fib or get a reversal bar. And then at that point, Morgan, you're like, holy crap, there's no stress in my life. I'm going to go call my wife names, see if I can create some friction, right? Because there won't be any in your trading. Great job, though, on this one. So maybe you got lucky, but you were so close to solid, it was a luck based in your ability to read the indicators. I'll start calling you Beavis. I wonder if I can change your name. She's clapped back so fast. That's why we marry him like that. All right. Momentum and trigs down. Weak top. Am I wrong about the top? Nope. Jonathan, you are 100% right about the top. Why would you enter? Why would you enter? Why would you exit? And Jonathan, I love these guys. Morgan, I love these. This is ego. This is ego, right? Watch this. Oh, Jonathan, this comes with a big smile and all the love that I have in my heart for this one. This is being a hindsight's 50-50. Jonathan says that in the middle of freaking nowhere, that would have been his exit. And guys, I lovingly call bullshit. There was no reason to exit. And then if you're on the wrong side of the triggers, there was no reason to enter with everything above. Not from a termination. So it's easy to go back after and say, look what would have happened if I just made up rules on the spot. I would have been freaking rich. And then with all of the triggers up here, the large haven't broken, the gap theory just happened. Are you telling me that you would have exited to the tick right below and then gotten out right here, but had the wherewithal to say, oh my gosh, I know it's going to go down, I'm going to re-enter and do this. And I would have exited right here in the middle of freaking nowhere. Lovingly, with respect. This is the kind of stuff that gets you guys jumping in and jumping out. This is the kind of stuff that makes you feel invincible. Let me show you how good of a trader I am real quick. Take care. So guys, I had a chart open on the side and I'm trading while I teach the room. And I'll show you exactly what I did. But I needed to see what happened in the past just so I can remember what it was. But I jumped in short right here. And then I exited right here at the bottom of this bar and then re-entered right here and I exited right here and I noticed that it was probably going to pull back. So I entered right here and I exited right there at the synthetic triggers, but just reversed my position. And I exited right here because I knew that that was going to be a divergence. And then I entered, also reversed it, and then exited. And then I exited here, and then I re-entered here, and then I added on here, right? Guys, it's easy after the fact to think of a million things that you should have done. No, Jen, I'm completely full of shit. But because I know exactly what happened looking back historically, it's easy to say that, right? This was my exit. This can't be my exit. I didn't hit anything, right? This can't be my entry. I don't have any rules met. So beware the temptation to go back historically and convince yourself how amazing your trading would have been with jumping in and jumping out. Avoid the temptation. And guys, here's the truth, is that when this bad top comes back and retests, now it's amazing. Jonathan, here's your strong top. So off of this strong top, guys, the only opportunity that I could ever see would be this one right here that fits the rules completely. And that was the momentum trade that takes you all the way down to these one-to-ones. Does that make sense, everybody? There's a lot of nonsense and indecision in here that's not my money. But if I sit on my hands and do nothing, suddenly I've got a termination. I've got everything down. I've got to pull back to the mid-band right at the triggers. And wild horses can't keep me out of this trade. But I can't convince myself that there was $1,000 to make in this right here. And it is. It's after the fact, Jonathan. I know that it is. Kenan, take care. Kenan, did you go to the user guide? There's a whole section dedicated to teaching you how to do it. Let me give you the link. Have a great weekend, brother. And Jonathan, I'm poking fun because what you're doing isn't unique to you at all. There was an entire area where it was undecided what the market was going to do. Right up until this termination, right up until all the triggers got below it, right up until everything rolled and agreed. And then, Jonathan, it was the most beautiful trade ever. And it's hard to not convince yourself that you could have been like Kid Quick, Johnny Lightning, catch every swing. So when you go back historically, yeah, this is the one, right? Pulled to resistance, all triggers below, they didn't even have to roll. So Jonathan, you nailed the weak top, but weak tops, if they come back, retest, and look like this, man, that's a strong top. Let's find this trade. Does that make sense? And you actually see that a lot on Overrun. Guys, Overrun lets me know that they couldn't quite pull it off, right? Overrun lets me know. Let me see if I can find another example of it. And I may not. Overrun lets you know that the sellers aren't done trying. That's your weak bottom. Does that make sense? And then when it comes up and retests the area that overran and they can't do anything, that's gold. That's freaking amazing. So it's just that little patience piece. There's nothing to do until there's something to do. And you notice how that hit off resistance is exactly what started the push down. And then that's where Pete got run over. He didn't post that one. Did you get that one, Pete? Big fat fib jump in? I know your patterns, ladies and gentlemen. I know your patterns. So Jonathan, that was awesome. And thank you for posting that. Because it really does. If we start looking at what we think we would do when rules aren't met, rather than looking at what we would do when our rules are met, we start believing that there's a lot of money to be made in areas that are really going to turn into a lot of losses. Well, you would have lost that one, Pete. That one would have lost. That one would have got you. And this is why I ask you guys, just focus on rules. Focus on rules for a little bit. You'll find more opportunities, but don't convince yourself that you would have made $1 million where there wasn't $1 million to make. Gary on Simulator. Maybe you're doing a one up, down, one down pattern. Took 2 swipes, out with the second divergence, jumped in. Gary, I like your live trading better. Your live trading makes more sense to me. Nicely done, though. You've got so much trust in that large chart now. It's pretty cool. It's pretty cool to see. Yeah, Pete, it would have. But man, I don't disagree with your ideas. I'll never do it myself, but I know exactly. I know exactly. But Jonathan, did it really look good? That's the problem is guys, let me show you something. See if we can find an image. That's it. That brick of money. This looks good, doesn't it? But that's not mine. That's not mine. That's mine if I don't follow rules. But it's easy for me to take this picture and show it to you guys. Guys, this is all mine, right? Hindsight, this is all mine. But the reality is I'm not producing it live. I'm going back, like I'm watching a movie twice and predicting the end. So focus on having those rules, guys. Focus on having those advantages. And then Jonathan, this is a little different pattern, right? It's a little different pattern. We don't talk about that one a whole lot. What did we get though? 1, 2, 3 divergences in the same price range. This is a pretty good indication too, right? There's my overrun, and then there's my 3 divergences suggesting that yes, it is in fact overrun. And then when it pushes all the way down here, notice that the large triggers don't follow yet. So between the overrun and the large triggers that don't follow, I'm not even thinking about anything until they correct. And this is still pretty aggressive because I still have the potential because of this overrun to continue up. I don't know if it's going to hold. So I let it hold. And then I capitalize when all of my triggers agree. There's patience, guys. There's a big difference between the trade and almost the trade. And you'll get to that point to where you recognize it. Isn't that cool? Let me show you a picture. This is one of my favorites, and I made this for another client because he always jumped in. He always jumped into the market and said, well, it's a fib. Well, it's a fib. And I made this picture. This is the picture that I lovingly refer to as might versus has, and it happens to be on a range chart. Hey, Grant, have a great one, man. Do you say that bon temp? Do you say the S? I'm going to have to find the enunciation so I can reply to you and not sound like a Yahoo. I guess you got to be a little French too, right? Bon temp. There we go. Got to sound like the candle from Cinderella or whatever that is, Beauty and the Beast. So guys, this is a pretty cool lesson. Bon ton roula? Well, that doesn't make sense. People drink in Louisiana a lot. Roula. Roule? Man. We'll talk on the phone one day and you can correct me. So guys, check this out. This is a pretty cool lesson. Have a great weekend, Grant. Everything is up. Everything's screaming to the upside. And this is just a range chart. But odds favorable, green triggers, green background, and you hit this resistance, right? And there's a lot of people that develop so much faith in these fibs that they say, I think resistance will hold, and they go short. But they disregard all the momentum, and then they get stopped out. And then they're like, no, but I really think this fib's going to hold, and they go short. But everything is still greening up, and they get stopped out. And they're like, well, now my background is red. This fib has to hold. The large triggers are still up. And they get stopped out. And guys, I see this a lot. I think it should. I want it to. Why isn't it? Damn it, it's gotta, right? That's the natural progression. But the very price where you hoped that fib would hold is the exact same price where everything said that it's held. And it's this section right in the middle that keeps you out of the fight. It's letting those triggers roll. It's letting everything agree. And that kind of goes back to the picture, right? When you think it's down, but it's not a clear path and it's not a good top, and you don't really have what you're looking for, it might hold, it could hold, it has held, and then it becomes easy. And guys, it takes a while to recognize, to build that patience, to feel comfortable with it, right? But once you get there, it's pretty cool how it works out. How we doing so far? We're on Friday, guys. We've gotten through all the pictures. I'm about to take a break. But I want you guys to tell me, how you feeling? What do we think about terminations that create reversals, right? Hey, Paul, how do you feel about when a fib holds and the small triggers roll and it pulls right back to them? The same trade from 2004? How cool is that? And then Morgan, if I stay to the left side of those triggers, there's no reason to exit, right? But now I'm directly into fibs in a mid band and my large triggers are so far away and there's such a huge gap. And divergence printed. What did this 50-50 look like? Let's see. I'm going to circle that top. Small's below the large, right? That's not even a 50-50. That's a clear path. This might have been one of our 20%. That was your only area. The triggers are way down here. Yeah, that wasn't a good look. That's a hard one to catch. Not sure I would have caught that one. Let's scroll back. I know you guys all caught that one. That was an easy one. So I'm going to leave the market up. Let's see what it does from that strong bottom. Notice that none of the triggers broke through. Notice that the smalls tried, but they couldn't. The large tried, but they couldn't. You didn't have any areas inside of triggers. No reason to try it anyway. And you guys will get to the point where this becomes your entry. So I'm going to leave you guys with the market. I'm going to go run a lap real quick, stretch my legs. It's Friday. I want you guys to do me a favor. Come up with some cool questions. Keep me busy. Otherwise, we're going to shut it down and go day drinking. I'll be back in about 5, guys. All right, guys, here we go. Let's get into the last hour. Jonathan. What we were discussing before the break, wait, not ready yet. So, weak triggers, right? You do have a clear path, but you have weak triggers. You don't have any areas inside of favorable large triggers. You've got multiple divergences. So it's not even, there's no advantages in place here. You do have a clear path, but that's the only thing that you have. You're losing momentum, not only on the large chart, but also on the smaller chart is showing you the losing momentum. And at this point, you're just kind of, I can't find a reason. I don't have momentum for a momentum trade. I don't have areas inside of favorable large triggers for a trend trade. Right? Nothing's rolled. I can't take a counter trend trade. And you're just in a holding pattern. And it's that sad realization that every dollar in the market may not be your dollar. And it went down. Ooh, my triggers look crazy. And it went right to the fib, and now it's weak triggers. And guys, what we're seeing is a market that's pushing down and pushing down hard. And it's coming from the termination. And Pete's waiting for it to get to the big fat fib. But there will be days. There will be days where the market will have these huge moves. And you won't find an entry that fits your rules, guys. And you just got to say, that's not my money. That's not my money. That's not my trade. That's not my long. That's not my short. It's simply not my money. Where's my crude oil chart? There it is. I've got a 50-50 into a mid band, but I've got 3 divergences. Guys, this is not my money. No matter what I'm hoping. If I tried the long, I had to get out. If I tried it again, I had to get out. If I tried it again, I had to get out. How much are you going to burn in commissions trying to predict what the market's going to do rather than simply just waiting for it to happen? So, what do you guys want to talk about? We got as much time as we need. I am going to go back and I'm going to circle tails. And I'm going to make videos of entries. That's going to be my goal for the next week. Is I'm just going to go back and I'm going to circle tails. And I'm going to see how many videos of entries I can make. Jeffrey, if you missed a review, do me a favor and repost it if you need a little feedback. Just going to circle tails, guys. This is all I'm going to do this weekend. Going to circle tails with odds favorable momentum. Just going to circle tails with odds favorable momentum. The one you're using to buy me dinner with, Morgan, that's my favorite. So, Jonathan, though, we're not trading tails, brother. What are we trading? We're looking for pullbacks to areas inside of favorable large triggers. You don't want to repost? We have 45 minutes, Jeffrey. Pull back to the area at the triggers. That's what we're looking for with these circles, Jonathan. Not anything other than, did I get a pullback? Did it go to the correction point? Was there an area there? And some of them will be, and some of them won't be. That was perfect, right? So if I go back and I keep circling these tails, I'm going to find 5, 6, 7, 8, 9, 10 high probability trend trades, right? I'm going to find like 15 that aren't. But all I'm doing is circling tails, and I'm recognizing how many times the market tends to pull back to areas inside of favorable large triggers. What's this doing for me? Well, it's keeping me from jumping in on reversal bars, right? It's helping me understand where the market shouldn't go. It's showing me what the perfect look looks like. And guys, this is how you develop trust in the methodology. It's not from me telling you that it works. I could tell you all freaking day that it works. All day long, I can tell you that it works. All day long, I can tell you don't trade into 3 divergences. All day long, I can say that you don't have a clear path. You've got to go back and believe it. You've got to go back and see it. You've got to go back and test it. And Jen, you have Not My Fantastic Money written right on your desk. Not My Fabulous Money. Not My Freaking Amazing Money is fantastic and bold. Amen. Same thing. 3, 4, hell. Let me show you what I sent my brother this morning, Morgan. Well, after 3, why are you still counting? Who cares? You've already reached your limit, right? This was the NASDAQ this morning, guys. Not unless I take my other shoe off. Darn lawnmower accident. Guys, this is a 50-50. It's coming from a good bottom. Could have entered, had to exit, could have entered, had to exit, could have entered, had to exit. And this is what the small chart looked like as they fought through this mid-band, or through these 1-to-1s. Do you guys see that? 6 divergences on a 50-50. It's a battlefield. And this is where your brain is going to say, and guys, I'm going to tell you right now, my brother and I went back and forth, and I was like, we're like, everything says up. Everything says up. Every indicator suggests that this market's going to go up. And it did. Everything said that it's more likely to go up than down. But I knew that this was a fighting ground. I knew that there was this huge fight there. And there was someone saying, ooh, I'm going to go long at the pivot stop out right here. And there was someone that said, oh, I'll take the close on the correct side here. And I'll take the pivot stop out here. And maybe I'll just go ahead and do the double here. Or no, I'll take the pivot stop out here. And guys, this is where accounts get blown. This is where accounts get blown out. Waiting for, hoping to, I gotta be first. I've gotta be the first one in the market to go up. And then the cool thing is, it did eventually go up. But it took it like 37 tries. I don't know about you guys. I don't want to take 37 losers hoping that it goes up. I want it to be easy. I want it to be simple, and I want it to be obvious. I want to say to myself, they're going to have to come get my stop, not I hope that they don't hit my stop, right? And that's kind of how it works. Morgan, are you swearing in my room? That's okay. I'm not afraid of some colorful language. Never have been. Let's see what you got, Jen. I sound preachy by the end of Friday. I know that I do. Because I want you guys thinking about these little things. I don't either. Oh, and there it is. Price reaches resistance. Triggers don't break. It reverses. It's a strong bottom. Market turns from the middle of nowhere. It's a weak bottom. 50-50 fails. Termination, no triggers through, reverses the market on its way down. No, Jen, I'm talking about this one. You went back and looked at your entries? I don't see any. I see a weak top, and then a strong bottom, and then a strong top. All this consolidation, and then it broke out of consolidation. Rule 2 keeps you from forming an opinion. And then once it breaks out, you start looking for your opportunities. Okay, so Jonathan, this is what you have to do. Let me help you with this. You said that there were entries, right? You said that you didn't take any, but there were entries. Okay, so do this for me, Jonathan. Take this same picture and write your rules. Where were your entries? Circle the exact spot that you would have entered and tell me the corresponding rule. So if you entered here, tell me why you jumped in a mid-band beyond all the trigger lines, right? If you jumped in here, tell me why you held a tried momentum trade against a loss of momentum. If you were outside here, do it. Tell me why. This is how you do it. It's easy to go back. Guys, check it out. I would have gone short right here and then I would have got out right about there. Because I am 74 flavors of kick-ass. You've got to be able to put your rules together. You've got to be able to write your rules on there. And then more importantly, your rules have to be proven to win more than they lose. Otherwise, they shouldn't be rules. And I'm not beating you up, Jonathan, but it's easy after the fact to say, look how amazing these trades would have been. It's easy when the market's already run 100 points. It's easy to convince yourself that you should have been a part of that. So make sure that you go back and write your rules on the chart. Why would you have gotten in? And let it be based on the entry rules, not what happens after your entry. Guys, that's how you get good at this. Because right here, I don't know what's going to happen next. Thanks, Paul. And then Jen says, crude's similar on the small, right? We've reached a decision-making point. It's not clear. And you can see the fight on the small chart. Isn't it wild? And then eventually, momentum wins. But how many can you take before? Yeah, Steve, when you come in to the Discord channel, there's Traders Chat, there's Education. Traders Chat is just where people that own the software go. And they post pictures and they talk and they do things, and you may see a little more advanced stuff over there. And then, Paul, this goes back to the lesson. You're like, woohoo, it cleared. And you're like, son of a gun, it's right into a fib. You're welcome, Steve. And guys, it's Friday. Everybody with rules is already on their boats. Everybody with rules is already sitting under a palm tree with a pina colada. I think that's my third reference to a pina colada today. I probably need to go get one. I don't like rum, though. We'll do version. I'm into a termination condition. I don't have any rules met. What do I do? What do I do? I don't know. Draw. Amen. Amen. I do love to draw. I just wait. The Florida bird is the mosquito, probably. Read the signs on your desk. My desk says don't trade into termination conditions. I literally have this on my desk, Jen. It says never trade into a termination condition. No such thing as should break. I have eliminated the word should from my trading because should has cost me thousands of dollars. And eventually, I'm going to get smart enough to listen to my own preaching and teaching. But I still trade into them sometimes. Sometimes I still trade without momentum. Sometimes I trade that dreaded word should. And guys, it works out less than I'd like it to. So, good stuff. Anybody have big plans for the weekend? Go hang out, do something fun. Painting a wall. Fun one. Baby shower, not yours. Better not be. Your girlfriend's not going to appreciate you going to a baby shower if it's yours and not hers. Guys, this is definitely a community, right? We all come in, we all have the exact same goals, and we all get to learn from each other. V Crypto, I didn't even see you sneak in the room. Welcome to the room. For you folks that are brand new, I want to bring this up. For you guys that are in your first day or two, that's a lot of beef, Paul. Your first few days with Nexgen really is. It's very much like drinking from a fire hose. It feels like there's a lot of information coming after you and all these different things. And then when you couple in the fact that there's a lot of people that are still at a different point than you, that know more than you because they've spent more time with us. Focus on the simple, and the more simple that you keep it, the easier it becomes. And you start to, things start to click, phrases start to click, stuff like that. So, and Paul, my wife's grandpa, one cow and one hog every year, and then he divided among his children every year. My in-laws always had beef and pork in the freezer from Grandpa's farm. The kids get the spillover. That's why we have kids. My kids come to my house and shop. They think it's the grocery store. Hey, Dad, I noticed you had all the stuff in the freezer. Can I take it back to Austin with me? Yes, you can. Of course you can. Speaking of, that's my thing this weekend. I'm going to go to Austin this weekend. Go hang out with my boys. Always a good time. Maybe I'll tattoo one of them. No, not this weekend. No tattoos this weekend. All right, Jonathan, let's see what you got. No, you can't just put entries within. Why? From 2078. Jonathan, why are you trading right here? Because it's the termination condition? Because the small triggers rolled? Because you pulled back to the trigger lines? Entries within is not entries rule. And Jonathan, I don't disagree. That's nice entry, right? Why on earth are you trading into a termination condition with no room to make it? So, Jonathan, define it. Talk about the termination. Talk about the rolling of the triggers. Talk about the pullback right to the area with everything agreeing down. Make it repeatable. This is hindsight. Write your rules on the chart. Entries within is not a rule. Entries within is, hey, I noticed it went down from here, right? Because why didn't you do it here? Does that make sense, Jonathan? Why didn't you do it here with the small triggers down rather than here with the small triggers up? Why didn't you do it at the mid band here instead of the mid band here? Why didn't you jump in right here? And I'm not saying that it's not a trade, but what's the difference between this and this? What's the difference between the pullback to the triggers here and the pullback triggers there? And guys, these are the things that you have to define for yourself. These are the things that you have to come in. So Jonathan, let's annotate your chart together. Because guys, this is part of the learning. And I'll tell you what, and I think I've said it 100 times and I'll say it again. Jonathan posts in the room and asks for feedback more than anybody. So he gets my undivided. This is a termination condition. This is a great top. No trigs through, right? And this is where everything rolls and agrees. Everything says down from that great top. Show me what you're talking about, Cheetah. So give me a why in the room, guys. I have identified the condition on my large chart that has me looking for a trade. Because this is important, right? Because this is the first step. This roll says let's go find a trade. Well, what are my rules for entry? Are my rules entry pull back to triggers? Because if that's the case, that's an entry, that's an entry, that's an entry, right? Is my rule let the triggers roll and pull back? Because that's exactly the same. Or is my rule take the pullback to the triggers, or take the pullback to the area that is at the triggers? Do you see how one leaves it open for interpretation? Might be that, it could be here, it might be there. Hell, I don't know. But there's only one of those that fits a specific rule. There's only one spot where I can say, hey, check this out, Mark. This is where my rules were met, and this is my entry. And this will be my entry every time this chart does that. Jonathan, does that make sense? You nailed it. But do you know why you nailed it? Do you know why it's this shaded box and not all the other pullback to the triggers? Guys, this is how you get great at what you do. This is how you get consistent with everything that you do, is when you do this. Cheetah, what do you mean? The difference between go in when it's green and when everything is red? That's up, these are up, that's up, divergence points up, triggers are up, everything's up, says up. Small triggers are crazy strong against it coming off of a termination condition. This is an opinion, Cheetah. This is I hope it holds. This says my termination condition made all of my triggers roll. I'm going to take a pullback to an area it triggers. It's not a high probability trend trade. It's not a high probability trend trade. This is trying to take advantage of this termination condition that rolled these small triggers. And when I take a pullback back to those rolled small triggers, this is what it looks like on a small chart. This is a trade that Nexgen started teaching in 2004. It's not a high probability trend trade. So Cheetah, you have to understand termination conditions and make sure that the triggers don't roll or don't break. You have to understand what it looks like when your triggers roll. And you have to be able to say that when a termination sets my smalls in the other direction, I can trade a pullback to those small triggers. And on the small chart, it looks like an impact right at the mid band, right at those large triggers rolled into it. And what happens is you start looking for this because of this. Does that make sense? And Cheetah, I can tell you this once, or you can scroll back. And let me show you how we're doing this, then I'll get to the next picture. You can scroll back and say, hey, look, there's a termination condition. There's where my triggers rolled. And damn it, there's a pullback to the mid band right at the large triggers that rolled. That was my opportunity. Or you can say, there's my no triggers through termination condition. There's where my small triggers rolled. There's my pullback right to those freaking large triggers. And off it goes. Let's see if it keeps working. Where's our top up here? There's my termination condition. Here's where my triggers roll. That was back there a little bit, wasn't it? And that's too soon. And then it never gave you that quick little hit, which means that now you're looking for the 50-50 trade. Does that make sense, everybody? Just because the rules are there doesn't mean that the setup is going to happen. There's your termination condition. Small triggers rolled. There's your pullback right to the mid-band, right at the triggers. Pretty cool, right? So, Cheetah, if you go back and now you know the language, now you know exactly what it takes to get you in, well, hell, you can go get 50 pictures of these and decide whether or not they win more than they lose. And now you've just added a trade to your plan. But you've got to go back and take the pictures. And you have to define exactly what it takes to get you in. Otherwise, it's not repeatable, guys. All right, Pete says, middle of nowhere, odds favorable. You said it all says up with momentum, but I'm not going to get suckered here. Let me wait for a reversal bar, and I'll get out of trouble. And guys, this is beautiful. This is Pete saying the small chart or the large chart says we're going up. The large chart is absolutely screaming. These three divergences said don't get caught in Uglyville, but when it pushes all the way down to that fib and everything is still going up, Pete says, let me get a little confirmation to make money. Pete, I really do like that trade. Gary, termination. Triggers roll. Don't really get your pullback. Gary says, I'm going to jump the hell in with everything on the right side. I'm just going to ride it up and make some money. All starts with the termination. Nice job, Gary. And then Joel. Joel says, check it out. When I have a 50-50 from a strong bottom and I get a pullback to support inside of favorable large triggers, they're going to pay me. Joel, beautiful. Absolutely beautiful. Stop where the market shouldn't go. And I love this little 1980s computer font you have going on. And all that momentum carries you right up. And Joel says, hey, money, money. Try and take it from me. I have momentum. No divergence on a 50-50. He's checking himself with rules. It's hard to do things without rules, guys. You've got to know your rules. You've got to know what you're looking for. You've got to know what it's going to take to get you into the market. You've got to know what it's going to take to get you out of the market. And today's sermon is brought to you by the letter Q and the number 12. So Adamos, you're going to want to put $20 into an envelope. And I'm going to send you my address. No, I'm just kidding. Right click on your entry chart and go to data series. And once you click data series, it's going to bring this up. Scroll all the way to the bottom and it says plot executions. Turn it on to text and marker. And you'll have to do that for every chart that you want to see it on. But that'll get you where you need to be. And here, let me take the picture of it, just so that you have it. There you go, bud. What was the reason for using the 10-2 on the NASDAQ that you see some people doing? Morgan, it's faster. So there's a couple different things. The 13-2 works great. Let me be clear. The 13-2 works great. The 10-2 works great. They're just a little bit different. The 10-2 is a little bit faster. So for me, on the 13.2, and we talked about this, let me pull up both pictures. On the 13.2, just try them both, right? No, it's one or the other. The 13.2 says that if those small triggers are against you at the area, don't ever fight those small triggers. Does that make sense? We know that rule, right? The 13.2 bar is a bigger bar, which means that if you wait for the reversal bar, it's a little more risk, which is totally cool. I don't care. I don't mind risk. Risk doesn't scare me. On the 10.2, it's virtually the same thing. But because it's a little smaller, a little faster, those small triggers aren't quite so detrimental. But the trade-off is, on the 10.2, is that if you get divergence from the high, even if the small triggers are a full bar away, I'm waiting for a reversal bar to enter the trade. It's just subtle. There's subtle little difference. And you just kind of have to pick the one that jives with you. Whichever one makes you happy, right? From term to term to term to term. Been here a month and a half and you'll ask this question. Uh-oh. You can ask anything. No worries. So Morgan, we have these things and they're called instructions. Steve, have a good one, man. I had to have my wife point these out to me. Apparently they're a thing. Almost everything has them. It's crazy. But building new charts is right here. So what I'm going to do is I'm going to give you a fish, but I'm also going to teach you to fish. So there's your reference. I need you hooked on phonics. But to build a chart, that's okay. We always do. And I don't mind helping. I'm going to go new. And I'm going to go chart. And then since this is crude oil, I'm going to do crude oil. But I can build one anywhere, right? So I'm going to go NASDAQ. Oop, that's the wrong NASDAQ. I'm going to go NASDAQ. Nope, that's the wrong NASDAQ. I'm going to go NASDAQ for the third time. And you want a 10-2. So I need to put in a template, Morgan. Hey, Jonathan, take care, man. Good job. So if it's a NASDAQ chart, well, it's just an old contract. Dude, you're doing great, Jonathan. I can't stress that enough. Keep focusing on being able to write your rules. I have to come down to Nexgen, NASDAQ Futures 10-2 Dynamic Renko Bar and click on it so I have a template. Body size is going to be 10. New bar is going to be 2. I want to activate tick replay. And once I have all of this, and we'll take a picture of it for you. So there's your setup for it, just so you have it. Once I have all that, I'm just going to click OK. Oops, and you know what I didn't do is I didn't add in, oh. I forgot to pull the other ones off. There we go. It's got to be 924. Then I click OK, and it's going to build a chart for me. And it's building it on a different screen. But that's the how-to. It's not hard to do. It doesn't take long at all to do it. But I put the template for the 10-2 in there for you. And then Adamos, thank you for going to the screencast link. I'm here waiting for Elon to pay me to do nothing because too many divergence. So Adamos, let's start on the large chart. Do you have odds favorable momentum? I want you thinking in these 3 simple terms every time you look at your charts. Momentum, clear path, and entry area. Is there separation between the small and the large? Why? Why are you waiting for it to break 67? Why aren't you waiting for it to reverse and go below 54? When did you get so smart that you know what the market's going to do? There's always two options, Adamos, up and down, right? And when I hit a termination condition, it means no more up. So you're absolutely right, waiting for it to break. But it also hits support, and I have to wait for that to break. And do you see how you're literally caught in between areas right now? Rule number 2 says, Adamos, you really don't have an advantage going long, but you also don't have an advantage going short. And this is what my brain does. And this is how I work. This is where I say, this is the range that the market is caught in. Does that make sense? You see it, rule number 2? So I don't limit myself to one direction because Adamos, I love to make money up or down. If I break 67, longs all day. If I break 53, shorts all day. Until one of these happen, I'm going to eat a sandwich. It's technical terms there, right? And you don't have to because you know exactly where the consolidation is and your rules keep you out. So this is where, and I get this a lot, and I used to do it too, is I'd say that my background is green, I'm waiting for it to break up, and I'm so hell-bent on waiting for longs that I miss the short. Or I'm so intent on looking for shorts that I miss the long. So I'm just going to say no. But honestly, with this chart, I don't care about these divergences. Couldn't care less. I'm directly into resistance. I don't even have to look at this chart. This chart says don't do it. Good stuff, man. And it's the same look on crude, isn't it? From termination to termination to termination to termination, it's leaning up, but man, I got a big ugly fib right there at 53. And Pete says, F your terminations, I'll trade into them anyway. The large had reverse. No, they threatened to reverse, Pete. They didn't reverse. They pinched, but they didn't roll. The reversal is when they pinch and roll the other way. Pete, can I beat you up for a second for the sake of education? Your triggers looked like that right there. They had pinched, right? And they may have started to turn red. But we know that they have to be wide, right? That pinch and roll is a transition. It really is. And you had an awesome termination. And your small triggers did roll. But dude, that's a lot of support. And it's a lot of support with divergence coming off of it. And it's two different trigger looks. And it's not inside of the trigger look, right? Yeah, and I know, but this is, I wanted everyone to see this. And it's a couple reasons. The first thing is, Pete's a fantastic trader. Pete has solid plans. Pete kicks more ass than it kicks his. And every now and then we get a little bored and we form an opinion. Every now and then we jump the gun just a little too soon because we're so good at our chart reads, we're so comfortable and confident with what we're seeing that there will be times where our chart read accidentally supersedes our rules. And that's cool. And Pete knew it wasn't perfect because it's only 2 contracts. Pete's a 6 to 10 contract kind of guy. So you knew it was a little risky, right? Probably should have waited. Or at least for the reversal bar. I love this. I love that you're willing to show this, Pete, because everyone believes that everybody that shows winners wins all the time, and we don't. Sometimes we make mistakes. Sometimes we lose advantages, but it still works out. Because in the long run, we have a plan where we win more than we lose. So, Pete, God bless you for being human. Morgan, did you right click? You forgot to put in your template, I think. So right click on the chart. You forgot to put in the template. God, I went through the whole thing. No. When you were building the chart, remember when we went through every bit of it step by step and I said build the don't forget the template? That's okay. So right click on your chart, go down to templates, go over to load, and yours is going to be NASDAQ Futures 10-2 Dynamic Renko Bar. Click on that and click load. And that should get you taken care of. But remember when we were building it and I said, oh, don't forget to put your template in. I feel like we're growing apart, Morgan. I feel like we're growing apart. We were so good, man. Just kidding. We all get excited. All right, Paul, let's see what you did. Into a termination condition, you go short. And it breaks. Divergence off of a 1-to-1 directly into a termination condition. It's not even a 50-50, Paul. It's not even a 50-50. So you went straight to your entry areas. You ignored the termination. No, you thought you had a high probability trend trade. What you took is you took confirmation of what looks like a trend trade directly into a termination. You waited for the confirmation because of the divergence. You did a great job following your rules. You just didn't have any room, I guess is what it is. Your thinking was right. Your termination condition read was wrong. How's that? You thought it was a 50-50, but it wasn't. It was a termination condition. Morgan, have a great day at work, man. But this is where, Paul, where I kind of say, if I don't have room to make money, I'm probably going to skip the trade. If it's so tight that my entry is directly into the fib that I hope breaks, I don't have any room to manage into trouble, right? So it's okay to miss these. It's okay to miss these. Does that make sense? Sometimes it's just not our money. And that's the difference. And my brother and I talk about this all the time. Chart reading is amazing, guys. Chart reading is awesome. And if you honest to goodness, every time you want to take a trade, have an out loud conversation with yourself about these three things. If you just, loud, hey, do I have momentum? Did price reach an area? What are my rules for entry? Let me say them out loud. Guys, it becomes pretty effortless. But as soon as you become a chart reader, the temptation is there to trade your chart read rather than your rules. As soon as you begin to recognize patterns, when you can start creating expectations based on patterns that you've seen, you're tempted. You really are. I'm not going to lie to you here. You are tempted to trade those reads and ditch your rules a little bit. And this is why I'm such a pain in your butt about follow your rules, know your rules, write your rules down, type your rules on the chart, because rules are repeatable, guys. If my rules for, I don't know, for cooking chicken say salt it, pepper it, grill it, right? But if I grill it and then salt and pepper it, it's not the same thing. Or if instead of grilling it, I decide to put it in the refrigerator, it's a different thing. So rules are very specific, and they make it so you can do the same thing over and over. It's like a recipe. And every time you deviate from the recipe, you're not sure what you're going to get. You're going to get a different product. So I love rules. Rules are the hardest thing to follow. But I think that's it, guys. I think we've had